The kind of this new tool about, this 20% risk reserve requirement for FX forward sales, is that going to work? How long lasting could this impact be?
Thank you for having me here. So definitely this 20% reserve charge is going to add costs to people and banks that want to short CNY in the forward market. So I think definitely this is going to at least deter some speculation in the short term. But with US dollar yields right now are much higher than CNY yields, I think market participants will still find an incentive to long dollar CNY in the forward market anyway.
What do you think is the high for this cycle on dollar offshore, dollar onshore?
So right now we are forecasting 7.20 by year end next year.
Oh, we could be there by the end of this week.
Yeah, that's also possible because we are seeing still very fierce dollar strength right now. But I think in the short term, if we look at the last peak of dollar renminbi during the trade war, 720 seems like a resistance level that the market will test next.
Are you expecting more signs of intervention from the PBoC moving forward then? I mean, if these stronger fixings are not really able to turn the tide, what other tools do they have?
Yeah, so this time, if we look the last months, what the PBoC have done, right? So they have been adjusting the daily fixing every day. They have been cutting the FX triple R, and now they do this 20% reserve charge. But I think they have more policy tools. So for example, even if they have lowered fixing every day, looking at onshore offshore spread as well as their FX reserve data, we haven't really seen much signs of very meaningful direct intervention from the central bank.
Much different from 2015.
Yeah, exactly. I think one reason is that the CFAS index, which means renminbi's valuation against a basket of currencies, has been stable and elevated above 100. So this can make the PBoC less resistant to a higher dollar renminbi this time. But of course, if we start to see like a quick fall in the CFAS index, then the PBoC may start to show more of its power through direct intervention or through more FX triple R cuts, etc. Yeah.
What else are you watching apart from everything we talked about? All the tools, all the levels you're watching. Is there anything we're ignoring at this point in time you think is important?
I think the Party Congress can be a very important event to look at because right now, I think the root cause for renminbi's weakness is that the domestic economy is just not strong enough to support their currency. So I think if we have more good news from either the policy end or the COVID end, some relaxation, then that's going to boost the sentiment and help the currency.
Should I expect other Asian currencies to also kind of continue on this kind of competitive devaluation? Or do you think everyone's going to have to start stepping up their defenses like the PBoC too?
Yes, so I think right now it's really the dollar strengths that have been driving the whole picture, right? So for Asian currencies similar to renminbi, they are facing multiple headwinds. You have a very hawkish Fed, and at the same time, the export picture isn't looking so great for Asian exporters, and at the same time, renminbi is no longer a very stable anchor. So I think more depreciation is possible for all Asian currencies. It's just that now, central banks are showing their hand. So market participants may be more cautious in terms of testing the upside.